Let's go going crazy. That bitch see this motion, now she wanna have my baby. Used to get paid only twice a month, now run this shit up daily. See shit coming way back then, I feel like that's alright. Yo, what is up, y'all? Apologies for that. I know that was crazy in the reds, bro. I had some people say that the actual audio was horrible on the last video, so I'm trying to fix it. I upped the amps. I already know that's gonna be crazy. I want to kind of get that intro with the music going, everything just go crazy. We got a great one for y'all today. It's not gonna look like crazy professional editing and all that. It's just some more information I just want to throw at y'all, get it out the way so everyone can just kind of get on pace and get going, right? I took 20 minutes to get y'all some simple steps. I want to cut that all out. I want to get y'all the information y'all need so y'all can go on about y'all day and just have fun with it, right? You won't need too much notes for this one. It's more so just understanding the concept. Once you got the concept, I think you'd be all right. But kind of just like before we get into it, I have some people ask me like, yo, what is your analysis for gold? I have other people ask me like, yo, are you buying shares of gold? So just like, I kind of want to bring everybody to the same space, right? If you're a second grade teacher, you want to prepare all your students for third grade, right? Bring them all up together. I'm not comparing anybody to second graders, but it's like if you're a fifth grade teacher, your job is to prepare everybody for sixth grade, preparing for middle school, right? And what's to come forward. So whether you're a beginner trader who don't know nothing about this, but you want to be a trader, just learn what trading is, or you're experienced, you're professional, you've been in this forever, right? Well, I'm gonna bring everybody up so they keep gaining knowledge, keep earning something for them. I kind of want to outline this to where my 2-year-old niece right now can grow up, know nothing about the stock market, come to this channel and literally be like an efficient, at least know how to trade right, what it is, and like know like, okay, I got a good base knowledge like what I could be doing right now, right? So that's really my goal, just bring everybody up together. I realize the actual concept of trading is not to realize what it actually is, right? So we're literally gonna go straight into it. Episode 1, let's do a quick recap, right? I literally spent 20 minutes telling everybody, go to Baby Pips, go to Top Tier Academy, literally the easiest sites to just make a free account on, go through some lessons, take some notes, mentally take some notes, know what pages to refer back to. I still use Baby Pips as a referral to this day, right? There may be something I'm just kind of like, can't exactly remember the information, but I know exactly where to find it and exactly how to get that information. It's literally so great for you guys. Like, it's a lot of beginner stuff, yeah, to the point where you can't just use Baby Pips and be an efficient trader. There's still levels to it that you got to go through, but at the same time, like literally the top in this industry, bro, like professional millionaire, billionaire traders will tell you to use Baby Pips. And Top Tier Academy, just a different style of it. You got videos, you got more on psychology. It's so great. Just like that is a great start to go, right? I'm not going to spend too much time wasting y'all time, right? Let's keep this kind of quick, easy, and fun, right? So first of all, what is investing in the stock market, right? If you think about the stock market, at least in the U.S., right? The U.S. stock market, there's companies like Apple, Microsoft, Tesla, a bunch of different companies, right, that you can go into. Is basically every publicly listed U.S. company that's in the U.S. stock market. There's a Japanese stock market, right? You'll find the companies of that country, and if they're publicly listed, right, there's some that aren't. For example, I think SpaceX is a private company. We'll get into all of that, but like you can't go buy shares of SpaceX, but you can go buy shares of Apple or Alphabet or any of your companies that you believe, Netflix, Amazon, things like that, right? Those are things you can invest in. How a company can have stock, right? Basically, a private company decides to go public. They're going first hire experts, where you have investment bankers, you got lawyers, accountants, basically the people to make sure that you're going to run your business efficiently as a publicly listed company, right? You're going to first prep your SEC registration forms, right? That's going to be like income statements, balance sheets, all that good stuff, your business risks and strategies, basically that transparency form for investors to look at, like, okay, this looks like a good stock, good business that I would actually want to invest in. Then obviously you got to give the Security and Exchange Commission time to like view it and approve. But once they do that, you basically get the IPO day, where you got to make sure you have the details, how many shares you're actually going to have listed, right? Because obviously if you own this company, you're going to have a percentage of shares, and whoever else is going to have a percentage of the shares that owns this company. You're going to have that starting price of shares. You're going to have that exchange listing, whether it's New York Stock Exchange or another country, or if it's NASDAQ, right? That's kind of what exchange listing is, basically where people can go and see your company listed. The pre-launch marketing before IPO day, that's basically marketing, right? Short term. Initial public offering, that's your IPO day. That's where shares are going to start being traded on the exchange, where people can go onto that exchange and start buying those shares. As they buy the shares, right, buyers are going to drive the price up. How is it just going to knock me out of my slide? So that's where traders can buy shares of the exchange, right? Secondary markets, that's where brokers like Robinhood, Fidelity, TD Ameritrade, they're going to allow traders, investors to buy and sell shares. I know Robinhood doesn't actually have shares. If you buy out there, it's kind of like they just write down how many you bought at what time for what price and when you sold it, right? That's why they can't really pay out to many people. They depend on people filling it. Others, though, they may actually buy some shares to where they can actually sell them to you. You can just hold it on their platform. That's how sometimes they run it. Now, for example, right, if I decided to buy Tesla stock, I'm not going to say how they got listed, right? We just kind of went through that. They went through the process. Market capital, right? The worth of Tesla, this says around 1 trillion. It's actually a little bit more, but they say one share or stock is worth $400. That means they're going to be there's going to be 2,500,000,000 of those shares of Tesla, which each are worth $400. Now, if that value of Tesla goes up to 1.1 trillion, that one share will be worth 440, right? So if you're spending $400 to buy one share and you profit 10%, that's going to make that $440, right? That's how someone can profit off of a stock of Tesla. That's the process of buying it. Now, what if Tesla goes down, right? Obviously, you're going to lose money. But in terms of like how much, you got to think in percentages, right? Tesla can shoot down $1 million. You're not going to have $10 of stock and it goes to zero, right? It's going to be a percentage, right? So if Tesla goes down 5%, your shares are only going to go down by 5%. You're still going to have money until your company just doesn't exist or they go bankrupt or whatever, until there's no more value, right? If you only have $100 into a stock, right, and they go down millions, they go down 50%, you're only going to lose 50%. That's why a lot of people may have like $700,000 into a stock and be like, oh, I lost everything, I have nothing. It's because they probably have like $200 left, right? If you go from 700,000, you look at it and it says $200, you're gonna be like, bro, this is like it's nothing now. It's crumbs, bro. It's dust. But basically, right, just for that example of Tesla, $400 minus 5% would equal $380. Your one share that you bought at $400 is going to shrink to $380. So if you used to sell that one stock you had that you bought for $400, if it loses 5%, you're going to get $380 back. Now, my personal opinion about the stock market, I love it. I'm very educated about it. I choose to primarily focus on foreign exchange, crypto, kind of like futures as well, which is more so commodities, and just trading NASDAQ as a whole. You can do that in the stock market, right? You can trade stocks through options, and that's what Kim loves to do. We got other people that love to do that, but me mainly, I don't focus in the stock market, more so because I tried to branch out the forex name so hard after it just had such a bad name for the last few years. When people see what I do, they'll be like, oh, he must just be in the stock market, right? Oh, he trades the stock market, but people do, and you can, but I personally just don't, right? That's just my own opinion because I want to distinguish, right? There's nothing wrong with having options, trading with stock market, or any of that. It's very profitable. There's a lot of money to be made. I started in Forex. I just personally would like to stay there and kind of focus on from there. So we'll kind of go into that, what all the different subjects are, but for right now, I just had to explain the stock market so people can understand, okay, what's the difference between the stock market and now Forex, right? What does it look like to actually trade currency? What is a currency market? What is Forex? What is FX, right? All of it is about the same thing. So trading Forex, what are we actually doing here? The dollar has a value against other currency. Whether believe it or not, if you have a dollar, this is like obviously a fake $100 bill, but if you have $1, this is probably not even worth a dollar. If you have $1 US, it's not going to equal €1, 1 British pound, right? It's going to be probably 0.9 or 1.1 of that currency. The dollar actually has a value against others, and they call it the dollar index. The dollar index is the US dollar versus like 100 other currencies, right? That's how we value how much it's actually worth, right? It's a fiat currency, so it's no longer tied to gold, right? Before there was like ounce of gold for each dollar or something like that, but now that we have so many dollars, we can't tie it to gold anymore. So they call it fiat because it's not actually tied to anything, but you can still compare it and value it versus other currencies. Most commodities value is based off the dollar, right? Gold still has a value. So how much gold you can get still has a value for US dollar. Everything has a value for the dollar. Capitalistic world. Other trading pairs, right? So the trading pair is a pair of currencies, right? You got the US dollar versus the Japanese yen. That's sometimes how it looks. You got the euro versus the Great British pound. You got NASDAQ versus US dollar. That's how it's going to be set up in forex, right? Think of a forex mindset. If you see NAS 100 or just NAS, that's NASDAQ, right? It's going to be compared to the dollar. You're not going to just see, oh, NASDAQ is 20,000. 20,000 what? 20,000 points, 20,000 apples, $20,000, right? If you see US dollar versus the Japanese yen, right? How many dollars are you going to get for that yen? We'll go more into it. See that one as the US dollar and that yen as the bottom. That's how you compare it. That's how you get that 0.5. If you need $1 US for 2 yen, then obviously, right, that's where you get that 0.5. How gold and currencies are valued. It's called basically the exchange rate. For an iPhone, right? You may have to spend 1,000 USD for an iPhone. But if you're in a different country that uses the euro, you can actually get an iPhone for like 900 euro, right? But it's not going to be 900 US dollars. It's going to be euro. So that's where the difference can be. And I kind of got the trader's action down here, right? You purchase 1,000 euros at the euro versus the USD exchange rate of 1.1800, right? That's where they're showing, okay, you bought 10,000 euros and you sold 11,800 US dollars. That's to have that euro. Now you're in a country that uses euro, right? Like you're anywhere in the European Union. 2 weeks later, you exchange your 10,000 euros back to US dollars. Clearly, you ain't spend a euro that you just flipped currency, but maybe you just want to spending money, but it was taken care of anyways. You had that $10,000. You kept the same exact 10,000. You're coming back to US. At least you want to exchange for the dollars, right? At the exchange rate of 1.25 instead of the 1.18. So now you're selling that 10,000 euros and you're going to get back 12,500 US dollars. You earn a profit of $700 in 2 weeks, right? Where did that profit come from? It's because this exchange rate, that value of the euro versus the dollar, is fluctuating, right? You change it for exchange rate of 1.18 and then it became 1.25 as you change it back. You sold US dollar for euro and then you sold euro for US dollar back and made a profit in that fluctuation, right? So it kind of feels like buying a share of a company in a way, right? What if you just bought $10,000 with a company of euro, right? But it's a little bit different when you see it out on the chart and you're actually on the platform of it. So to understand those currency pairs, you got the base versus the quote. When buying, the exchange rate tells you how much you have to pay in units of the quote currencies to buy 1 unit of the base currency. So example we got right here, you have to pay $1.21 for just 1 British pound, right? That's how the exchange rate works. And we'll get into how this price is valued and how it changes. But basically, to own 1 British pound, you're going to pay $1.21, right? But if we went higher, like maybe you wanted 100 British pounds, you're going to pay $121.22, right? That's kind of how it works with like the base currency and the quote currency. So if you see a different ticker right here for a different currency or maybe a crypto, that is called the base currency. This is going to be the quote. Remember that, guys. First one is the base, second one is the quote. Was comprehension pod, right? Make sure everything we've done so far is kind of understanding, because moving forward, this is all about comprehension. This is all about understanding the concept, right? This so that when you're furthering your education, you can actually make money with what you're coming up with, right? So someone who's like, as far as I am, I'm like, bro, this video is going to be worthless to my knowledge, right? Because this is going to be everything I kind of already understand or should know day one, but that's okay, right? We're going to get through the day ones, the day twos, so we can get up there to like year 2 and be past somebody who's on year 5, right? I think we got to what we need, right? This everything from before is understood, right? How stock market works, how the base versus the quote works, putting it all together. If you're trading forex or gold or cryptocurrencies, wherever it may be, if you're trading, right, instead of investing in the stock market, in a sense, you're buying a position at the price at that exchange rate, not a share. You're buying that position of the price. Position just means that's where you put your buy at for that price as it goes up or down, right? At that exchange rate. You can sell at that position, you could buy at that position, right? And it's gonna be a price. That's the price that you are trading at. All right. So you can also sell position for a specific price, right? So let's say I'm selling gold at 3,600, right? When price goes up to 3,700, I'm gonna lose money, right? How do you lose money when I never owned a share of gold and it actually went up because I was in the sell position at 3,600 and it went up to 3,700. So between that 100 per points of whatever percentage in my wager, that is where I'm going to lose money. Now, let's say I sold at 3,600, right? The same number, right? We're selling at 3,600 for gold, right? As it goes down, maybe 3,500. 3,400, right? That is where we're actually going to start earning money. So in trading, you can actually buy and sell your prize, the position that you're at. You don't need to own any shares. You don't have to worry about stocks in a sense. It's yeah, there's still news, yeah, there's still releases. There's a little bit of different sense of when you're trading currencies. Obviously, you're more so worried about the economies, interest rates, right? What the presidents are doing, war, stuff like that. Now, if you're trading stock markets, you're more so worried about like their latest releases or earning reports. There's not going to be an earning report for the US dollar unless it's GDP or employment rates, right? So there's a little bit of a difference, but this all kind of can be wrapped up in the same thing. So now, how do we get into trading? Let's be for real. Let's subscribe for more. This is episode 2. It's a little bit choppy. It's very kind of unprofessional, but guess what? We're literally going to like put this all together. Like all of this is going to look so much better. It's going to be so much funner, but this is like so beginner information. Like let's just get this out the way. You know what I'm saying? Like let's just work through this, let's learn this so that when we get to like that crazier stuff, that's where we can worry about like, bro, it's going to be like 10, there's gonna be like 100,000 views just based off like the thumbnail, right? Or like the first 5-10 seconds, right? And the rest is just great information. We can worry about the looks, how things are going, bro. But right now, we just want to get everybody up to speed. We want to get some content out. We want to get everybody on board. On top of that, join Stack Digital Figures. It's gonna be in the link below, and you can actually start learning to trade more today. Not have to worry about the YouTube University, right? Get with me, get with Cam, get with our other people that's within here that want to actually give out content and have you guys join up and just follow them so you can take signals and earn money through trading. Appreciate y'all for your time. We'll see y'all soon.